Now you can see there was one trade I had from here to here, and then there was also another trade entry I had from here going all the way back up towards this zone here. Same thing. And then what happened when I got to this zone here again? We just had a rinse and repeat of what happened over here. This is mean reversion.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Hello guys and girls, and welcome back. It's your boy Big John. The at's at the bottom of the screen if you like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'll be speaking about is how you're going to be able to catch multiple trade setups using the mean reversion trading strategy. Now, this helps traders when the market is in a consolidation state and you start to see the market, bouncing off of support and resistance zones. So I do hope you're going to like this one, guys and girls, and let's get straight into the video. Okay, so as you can see, I am on my chart at the moment. I'm looking at a lot of my areas of where I'm going to be drawing either support and resistance and stuff like that on the 15-minute time frame. But like it said in the beginning of this video, you can use higher time frames if you cannot see structure. Also, so we can get this out of the way from the get-go, the whole idea of the thumbnail is based on the fact if you already have a profitable account that you are trading with sensible lot sizes, something like a $1,000, $5,000 or $10,000 account, you are trading at 1 to 2% and you are sensibly growing that account. If you are doing that, then you can have another account which will be like a joke account. Hyper growth is what I call it, where you will be able to leverage more and make the type of money stated in the thumbnail. With all of that good stuff being said, let's get straight into the strategy. So as you can see here on my chart, I'm going to go through all of the major pairs just so you can understand the concept of this here. We need to make sure that prices of course hit a support and resistance level, and then we're going to be looking for a possible re-entry of a trade to take it for a buy or for a sell. You're going to have a week that is about to occur, like the week is going to start soon. And what you want to do is just look over to the left previously to see if there's any major levels of support and resistance. So for me on Euro USD, I can already see there's a huge level of support and resistance over here on the left, which shows me that price has managed to wick down towards this area and about the body of the candles here, and it's managed to go up. Now, of course, I've managed to gain the support and resistance at the week that just went by looking at this area over here, so we can see this. So let's start from the beginning so we can go from the top down. Even going into the week that just happened, we can see that there was a resistance level here and price pushed down. We can see there was another resistance level here and price pushed down. Now, of course, instead of me just trading straight away, which I would have if price went back up to this level, but it didn't, I was waiting. So I put a resistance zone here, which is a major level for me. I put another resistance zone here, which is a major level for me. Of course, for any sell trades, I would be waiting for the market to go to either one of these two levels and look for an opportunity. So every time there's a major level, I've marked that out with a red circle, and every time there's an entry, you see I put a yellow circle. Price has created, of course, two resistance levels here, and then it created in this week a support level for me here. How was I able to look for a trade now? So whenever price went to one of these levels, I would have looked for an entry or close enough. This is what we need, because price does not have to be exact. So we can see that the market had gone to this level close enough right around here, and I would have been looking for an entry when I saw some type of rejection of this level. We can see when we look closer that there was a bearish candle rejection here and price failed to break that zone. So I would have entered this trade and put my stop loss above this level and looked for a possible TP level of previous market structure. I can see that there was a level right here of previous market structure, and of course we had this level all the way down here. So that already gave me two possible TP levels. If we wanted to say 3 TP levels, there was also another level over here in the market. Now, you had multiple re-entries in this trade if you wanted to. You had another entry here and another entry here, but let's just base it on the first entry to make it simple. Now you can see there was one trade I had from here to here, and then there was also another trade entry I had from here going all the way back up towards this zone here. Same thing. And then what happened when I got to this zone here again? We just had a rinse and repeat of what happened over here. This is mean reversion. This is what people trade a lot of the time when they're looking for consolidation on higher time frames, but they go to a lower time frame to gain entry for nice intraday scalp trades or day trades. You can set alerts, as I've shown you in the previous video of how you had been able to set alerts, and you could even still set these alerts with possible take profit levels and your stop loss level in order to help you in these trades if you're too busy to look at the screen. AUDUSD, and you can see the same type of thing here. So for me to find my key level here, I've just looked over to the left. You can see that the market had got to a position, if we zoom in, where it did find some type of breakout into this zone. It found a support in this zone and then managed to buy back up. How we can verify that this zone is some type of support area, we can see the market did all of this and then came back down and then bought off of this zone. This gives me nothing but a belief to say that if the market goes to touch this area again, there's a possibility it can buy. And what did we see here? The market came close to this area right over here, created a bullish engulfing candle. I've been talking about these types of things all of last week when it comes to gold, and I'm telling people about entries of gold. And yes, this strategy can work with gold as well. For anybody asking, it can work with gold, it can work with indices. It's simple support and resistance just based on the concept of mean reversion. We can see right now that the market had an entry here and we would have been able to buy price. Remember what I said, price doesn't have to hit this area exactly. Price never has to be exact, so you have to understand that. But of course you would have had your stop loss below here and you would have been able to catch this trade going up. Now, in all fairness, this wasn't the greatest trade because when I look here, there wasn't great previous market structure directly beside me to say, you know, price is going to buy up towards this area. This would have been a trade setup I would have been a bit apprehensive of because I cannot see anything directly here telling me where price can go towards. Of course, if you go up to higher time frames, you're going to start to see more structure. If we go over to the left, but we can see that this is a strong trending market. It gives us a belief that this market might reverse for a sell at any given point. So in all fairness, you could have caught a trade here, but for me, this wasn't a great setup, just like EU was, and I probably would have left this pair. So you can see how I'm starting to break apart which majors I would have traded. Now, when price got to this resistance level over here, you would not have entered this pair. Why would you have not entered this trade? Because we didn't see a break back out and a retest of this resistance area. We've seen the market completely disregard this area, break out of this area, and find a retest to this level on the top side for a continuation of a buy. Yes, you could have called this as a continuation of a buy, but this is not what we're looking at. We're looking at simple bounces between support and resistance during the period of every day or within that week. Neo, the indicator with Telegram alerts, is an all-in-one break and retest indicator. Neo is set up to help traders find an entry into the market for long-term trades. Based from the daily, weekly, and monthly time frame, the Neo alerts will help you identify high probability setups, meaning long-term consistency. There are two options when it comes to purchasing Neo. There is a standalone group where you will be receiving level 1 to 3 Neo trades. These trades will not come with a stop loss or a TP, but they will have an entry to give you good high probability setups into the market. There's also a VIP group where you will still be getting level 1 to 3 trades, but this time you will be trading along with me as well when I'm taking level 3 trades. These are the trades that have been recorded in the Discord from last year October, where you have seen that the indicator has provided 100% win rate at least on 2 occasions now. On average, I would say it's around about an 80% win rate, but it can give or take depending on market conditions. With the new version of Neo, it has now been set up with 3 levels of trades. Level 1 is for the scalping type of trader, where you will be able to get in and out of the market very quickly in order for you to see your profits. Level 2 trades are set up for the day type of trader. This is where you might be holding a trade for a day or 2, or maybe even 3, so that you can secure the profits needed. Level 3 trades is based for the swing trader. This is where you're going to see the most profits in your trades, where you will be able to be in a trade and maximize profits by capturing a large amount of pips. With 3 Zoom calls a week, being a VIP member of NEO is a fantastic opportunity for you to be able to learn market structure and technical analysis to a high standard. Regular news alert updates or partial profit closures on the trade you're in is also a benefit of you being in the VIP group. Signing up for NEO is not hard at all. All you have to do is message me in Discord or Telegram. I hope this helps everybody when it comes to understanding what NEO can do for them and if they would like to get the service. Now we are on GBPUSD, and I have seen price do the same thing as I've previously explained. We can see that there was a key level here in the market where it had bought off and went in the bullish direction, and then we've seen that the market has come back to retest this area. So going into this week, and this one I have put a long position tool here, you can see that the market did come back down towards this area. So you had a possible entry here, and then you had also another possible entry here for this trade. So technically you had 2 trades here that went off of this level. Of course, previous market structure you can see is here, and if you go over to the left, we still have more market structure here where you could have longer TPs. This is what we want to see when you're looking for better trade setups and where the market could go to. And of course the market went all the way up to here for a fantastic trade. Your stop loss would have been below this level here. And now when we look at a resistance level, we can see the market had rejected off this level. So if we're looking at a future projection on what this price could do going into the week ahead, we are looking to see if the market wants to come back down to this level to find a continuation of a buyback up. If it goes to a resistance level up here, then we could be looking at a sell. Remember, when I'm talking about these positions, your job is not to win every single trade. Your job is to take positions and move forward with what happens, win or lose. This is why with a sensible account, 1,000, 5,000, 10,000 and trading at 1 to 2%, it's easier for you to see the wins and the losses better. If you trade with hyper growth, 25, 40, etc., you are in a position where it's going to be you're banking on the market doing great reversals and giving you what you need. If it's in a trending state and doesn't respect mean reversion, then your hyper growth account is most likely going to blow. I want to make sure that it's stated clearly for everybody. USD CAD, so we can see previously that there was some type of resistance level here in the market, so we was expecting price to come back towards this level and look for possible sells. Maybe you would have taken an opportunity around one of these levels because it was close enough to here, but again, that was down to the trader. We can clearly see why this isn't a great entry for a possible trade. Where is the market structure over here where price can go toward? There wasn't market structure all the way until we zoom back until over here. So the possibility of price going to a good level isn't already the greatest for us because we can see directly beside it there wasn't strong support and resistance levels. So for me, this wasn't a great setup, and we can even see what happened here when it got to that support level. We saw a lot of consolidation. So out of all the pairs I would have taken, this wouldn't have been one that I would have said was on my top priority. I would have rather used my leverage, hyper growth or normal growth on one of the better looking setups where I can see previously there's strong levels of support and resistance that the market could sell back towards. So you can see I'm showing you here how you can filter out which pairs you would like to take, and of course this is based on the major pairs because they've got the tightest spread. USDCHF, you had a little bit of a better zone here. Of course, when we go over to the left, you can see what I'm looking at here. There was a key level here in the market. Let me just get out my tool. Right over here, you can see there was a support level. Price broke up to this level, came back, retested this level and broke off at this level. So we can already see this as a support level, and there's a reason why the market stopped here in the first place. Now we can see there's a resistance level that had formed previously here. So when the market did get to this level previously here, this is how you would have been able to catch a sell. This is a better looking setup because price touched this level exactly. So if you had an alert here on this line right here for price action, you would have been in a position where you would have got an alert and you would have been able to take that trade. Your stop loss would have been above here and you would have caught this sell going back down to what? This level we previously have marked up. You could have even taken this trade just based on what you have seen previously over here in this huge buy that did happen at this zone. If not, you're in a position where you just have to wait for the market to get to this level again, and the market got to this level again right over here and gave you about, this was about 40 to 50 50 pip trade. I can just show you that right now. And there you go. You see about 44 pips. So I hope you're getting the understanding of what I'm explaining here and how you can be able to trade these types of trade setups. You would not have taken a trade down here in this strategy because of course you wanted a retest of this area. And this time they broke this area. And this is the last pair we're going to be going over. And this is one that trended a lot when it came to trade setups. There was no reason for you at all to be looking at a possible trade setup on UJ. Look here and look how we've even marked out this support level. Did we see the market come back to this level? No, you would not have been in UJ. Did you see a resistance towards this level here and then a break and a retest of this level for your entry? No. You see the market kept breaking this area. You might have started to see one here, but when you've got up to this level right here again, remember what we're trying to look for. So we would have been looking for the market to come down and then come back to this level and test it again, or something closer and similar to that. We did not see this on this market structure. So therefore we had no reason to be looking for a trade setup in this pair. So this is how it works, guys and girls. You do not need to overcomplicate Forex, especially if you're being sensible with a decent size account, $1,000, $5,000, $10,000 trading at 1 to 2%. You can easily trade this way. But what you've got to understand is you're going to win trades and you're going to lose trades. So with all of that being said, guys and girls, don't forget to like, comment, share, subscribe. I hope you like this video. Nice, short and sweet. It's your boy, Big John, and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.